IBM stock plummeted by over 25% today after a shocking earnings warning, shaking investor confidence and raising questions about the future of AI in tech. Here's an in-depth look at what happened and its implications. Looking ahead, the fallout from IBM's recent earnings miss is likely to result in significant repercussions that could reverberate throughout the technology sector. The company reported disappointing financial results, raising alarms regarding its growth trajectory and competitive positioning in a rapidly evolving market. Analysts are expected to downgrade IBM's stock and adjust price targets, reflecting these concerns. This situation may trigger similar declines in peer companies within the enterprise technology sector, as investor sentiment typically shifts in response to the performance of major players. Historically, IBM's struggles have been seen as a bellwether for broader challenges in the tech industry, which has been characterized by fierce competition and rapid innovation cycles. Moreover, the Federal Reserve could face increased pressure to consider interest rate cuts if the weakness in tech stocks spreads beyond IBM. This potential shift could impact broader market stability, as Fed Chair Kevin Warsh has maintained a strong stance against inflation, complicating the central bank's response to these developments. Market volatility is anticipated to rise, with futures for both the S&P 500 and Nasdaq already beginning to decline amid ongoing geopolitical tensions and economic uncertainties. Investors will be closely monitoring upcoming Q2 earnings reports from other hyperscalers, such as Microsoft and Amazon, to determine whether IBM's situation is an isolated incident or indicative of a larger sector-wide issue. The technology sector has been a key driver of economic growth, and any signs of weakness could prompt a reevaluation of investment strategies across the board. As we move forward, the critical question remains: how will this significant earnings miss reshape the landscape of technology investments? The outcome will likely influence investor confidence and spending in innovation, suggesting that stakeholders should brace for a transformative shift in market dynamics in the upcoming months. IBM has recently faced significant challenges as it attempts to transition from its traditional legacy hardware and services model to a more contemporary, AI-driven cloud and software solutions approach. This struggle has been ongoing for several years, marked by a series of hurdles that have stymied revenue growth in key AI segments. The company's recent pre-announcement of disappointing earnings serves as a stark reminder that, despite its ambitious plans for transformation, execution has lagged behind market expectations. Investors have grown increasingly skeptical, particularly as they witness legacy contracts underperforming while the anticipated growth from AI solutions fails to take off. This trend is not unique to IBM. The broader tech market has seen similar disillusionment among firms attempting to pivot toward AI-driven models. Historical downturns in the tech sector often lead to prolonged recovery periods, and IBM's current predicament echoes these past struggles. Key figures within IBM, including CEO Arvind Krishna, have consistently expressed their commitment to advancing AI technologies. However, the recent earnings miss raises pressing questions about the effectiveness of their strategy and the feasibility of achieving their long-term goals. The impact of this situation extends beyond mere financial metrics. It affects employee morale, investor confidence, and the company's competitive position in an increasingly crowded market. As IBM seeks to redefine itself, it faces the daunting task of not only delivering on its AI promises, but also restoring trust among stakeholders. The outlook remains uncertain, with the company needing to realign its strategic initiatives and enhance its execution capabilities. If IBM can effectively navigate these challenges, it may yet emerge as a leader in the AI landscape. But the path ahead requires decisive action and innovation to regain momentum. IBM's recent catastrophic stock plunge has sent shockwaves through the financial world, highlighting issues that extend far beyond the company itself. This downturn stems from an unexpected earnings warning, raising concerns about the sustainability of the artificial intelligence, AI, capital expenditures that have propelled many technology firms to new heights. Investors are increasingly skeptical about whether the vigorous spending on AI technologies can continue to support the high valuations that have characterized the tech sector in recent years. This skepticism is particularly pronounced given the recent volatility in chip stocks, which serve as essential components in AI and computing infrastructure. IBM's decline is emblematic of the dangers inherent in concentrated tech portfolios, where the missteps of a single company can trigger a cascade of forced selling across the sector. This situation is exacerbated by the fact that IBM has long been viewed as a bellwether for enterprise technology and AI infrastructure. As such, its struggles may signal deeper issues within the tech landscape, raising alarms for investors who may have heavily invested in similar companies. The fallout from IBM's earnings warning could have a chilling effect on sentiment throughout the tech and semiconductor sectors, which are already grappling with their own challenges. For the average investor, the implications of this event are significant. A downturn in a major tech player like IBM can dampen confidence in the entire sector, affecting retirement accounts, mutual funds, and individual investments. As IBM's stock continues to tumble, the ripple effects could lead to increased market volatility, impacting the financial futures of countless investors. Looking ahead, market participants will need to closely monitor not only IBM's recovery, but also the broader trends in tech spending and investor sentiment. Should the skepticism surrounding AI capital expenditures persist, it could lead to a reevaluation of tech valuations across the board. Investors may want to consider diversifying their portfolios to mitigate risks associated with concentrated holdings in the tech sector. The path forward for IBM and the tech industry at large will likely be shaped by how effectively these companies can adapt to changing market conditions and investor expectations. This morning, IBM announced a startling pre-announcement regarding its second quarter earnings. At approximately 9:30 a.m. Eastern Time, the company revealed that its results would fall significantly below Wall Street's expectations. The announcement triggered an immediate sell-off, with IBM stock collapsing by more than 25% within hours. Investors reacted sharply, with the stock dropping from around $140 to under $105 during early trading. This marks one of the largest single-day drops for a major technology company in recent memory, sending shockwaves throughout the market. The earnings miss is particularly concerning given IBM's ongoing efforts to pivot from its legacy hardware and services model to a more competitive AI-driven cloud and software strategy. IBM has long been viewed as a stalwart in the tech industry, but the company has faced increasing pressure from agile competitors like Microsoft and Amazon, who have rapidly captured market share in cloud computing and artificial intelligence. The severity of the earnings shortfall has shattered investor confidence in IBM's ability to successfully transition to this new paradigm. Analysts have noted that this downturn reflects broader challenges within the tech sector, where companies are racing to innovate while grappling with economic headwinds. The implications of this earnings miss extend beyond IBM itself. Analysts are now questioning the sustainability of the AI capital expenditure boom that many tech companies are relying on. With significant investments pouring into AI infrastructure and services, concerns are growing that not all companies will be able to deliver the anticipated returns. This situation may lead to increased scrutiny of tech stocks, particularly those that have heavily invested in AI without demonstrating tangible results. Looking ahead, IBM's leadership will likely face intense pressure to provide a clear and compelling strategy to regain investor trust. The company may need to reevaluate its approach to innovation and market positioning, focusing not only on AI, but also on enhancing operational efficiencies. As competitors continue to innovate and expand their offerings, IBM must act decisively to reestablish itself as a leader in the tech industry. The coming months will be critical for IBM as it seeks to navigate these turbulent waters and reassure stakeholders that it can adapt and thrive in an evolving market landscape. Specific strategic partnerships or new product launches may be necessary to regain momentum. As we analyze the fallout from IBM's earnings miss, how do you think this will impact the tech sector moving forward? Share your predictions in the comments, and don't forget to subscribe for more in-depth analyses.